All right, I think we're probably about ready. Okay, sounds good. Do we have anyone else on the phone other than Mr. Johnson? Two staff people. Okay, thanks.
Hi.
So for the folks on the phone, maybe mute your phone. You sound, we can hear you pretty, ruffling your papers. Get started in just 1 minute. It's fine. I just tend to like to read the name of the items that are up. Hello, everybody. Welcome. I'm going to go ahead and convene this work session of the Anchorage Assembly on the mill levy and Q1 budget revisions. We have, I think, about 5 items that were introduced for the purposes of levying taxes. And we will go ahead and do introductions. Now, today is the 12th of April. It's 1:06 p.m. We'll start with introductions over here. Mr. Perez-Verdia.
Cameron Perez-Verdia.
Mark Littlefield.
Karen Bronga.
Scott Myers.
Anna Brawley.
Exalta.
Christopher Constant. And on the phone, we have Mr. Johnson.
Here.
All right. And we also have our financial analyst and I believe Ms. Toth from Solid Waste Services on the phone and in the room. Go ahead and say hello. Introduce yourselves. You gotta turn there.
Sharon
Good
Lippman.
afternoon, Kelly Southwood.
All right. Thank you, Ms. Toth. And then
Marilyn Bonsoff, OMB.
Kent Goles.
all right, thank you. So I'll just start briefly with recognizing the challenge that we're facing without having certain audited financial documents. Within the details of what we're going to receive today, I would hope we get a briefing on how we're proposing that this is a balanced budget in the blind. And so just a little philosophical discussion about how or what our approach is to making sure we aren't doing something that we don't have the authority to do. With that, though, this is a broad conversation. It's a couple hours long. It's the first of at least 2 work sessions on the budget revisions in Q1. And so with that, I'll hand it over to OMB Director Sharon Lechner.
Thank you, Mr. Chairman. You are correct that we have anticipated the importance of knowing what 12/31/2023 fund balance is and have a proposal for how to address the lack of that information as one of our slides. So to get started, those of you who have seen me in social settings know that I like facts and
Ms. Lechner, go ahead, Ms. Alto.
Do we have copies of the slides, paper copies?
We do not have paper
I
copies.
need a
of-
paper copy. That's the only way I can do this because I take my notes on it, right? Like
Right.
that's the
So
thing.
to the
'cause-
clerk, do you have a copy of the slide deck that we can? Thank you. So we'll get it printed.
And we also need it on the work session one page if
Yeah,
it's not.
that for sure we need to do is upload it to the website.
Because it needs to be distributed not only for the members on the phone, for the public that could be listening, and then
Mr. Johnson. Mr. Johnson on the phone has just asked for a digital copy as well.
Okay, so I would ask the chairman's permission to take about a 3-minute break so I could do a save as and break the
That's
PowerPoint
fine.
into 2 sections. The public slides separate from my emergency slides.
Your notes
Okay.
and all of that. No,
Okay.
recognize that. We're not
Okay.
trying to put you on the spot.
Okay, okay.
Yeah, we just need to make sure the copies are available.
Okay.
So do what you need to do. Is there anything else we can talk about while you're doing that? Or should we
I'm
just
gonna
take
have
a
to,
break?
I'm gonna have to think while I do it.
All right, so
Okay.
we'll go ahead and get back to work in just a few minutes. Thank
Okay,
you.
okay.
Record snow on the way. As soon as it gets sent out, we'll get started.
No, this was after that.
So the document is 77 pages, I'm told. So it's going to take a long time to get document copies printed. So I think probably we should start. And then when the documents come, do our very best to go back and help folks take notes because we need to get through this. So with that context, I am going to say, Ms. Lechner, you get the what do they call it? The opportunity to be a new timer with us doing this, first time doing the budget. So no worries. We'll do what we can do, what we have, and we'll get better. There you go. You have the floor.
Thank you, Mr. Chairman. So those of you who have seen me in social settings know that I love little factoids. So let's start with one factoid, just one, which is what is the historical ratio of laid on the table budgets versus budgets that actually make it to the agenda or the addendum? And over the last 10 years, the ratio is 69% laid on the table versus 31% that have actually made it to the agenda or the addendum. And in fact, in the year 2006, all budget items were called TBS, which means nobody got anything. They were to be submitted later. And now let's get to the budget. So why was this laid on the table? There were several reasons. There were probably 20 or 30 reasons, but they were as follows. On Monday, April 1st, OMB learned that TANs will not be transacted this year. It affected many departments' revenues and many departments' expenses with a net impact to our net income, and we've got a slide for that, which we will look at later. More importantly, number two was very important. We learned on Friday, April 5th, from the assessor that we had an adjustment on total base that was large enough to adjust mill rates. So even if we had made the addendum, we would have had to have replaced everything with S versions anyway. Also, on Friday, April 5th, we learned that there was a large, very positive and very favorable item that was missing from solid waste's CIB list that we would hopefully all be in support of. That's grant funded and time sensitive. And also this year, this quarter one budget looks very different than most quarter one budgets. We have a lot of very unusual items, unlike what you normally see. What we normally see is labor, IGCs, and operating items. But this year has many items that are emanating from the balance sheet and items that are unusual, large, and complex in nature. And each one of them took time and attention to evaluate. So this was a request from Assemblymember Brawley, who requested, she actually requested a little bit less than what we're seeing. And you all have this in hard copy as a handout. So if you turn to your hard copies, you have the mill levy by tax district. And this is our draft mill levy by tax district. So if there are significant amendments to the budget, this could change. But what's super interesting about this year is if you look at the arrow on this slide, you will see a new row that we haven't seen for about 20 years. And this is one of the complexities that caused this quarter to be a little bit different than in the past, and that is the Anchorage Building Safety Service Area, and we will talk about that. But this shows the mill rates by type and by surface area. So let's talk about what topics we have to cover today. Number one, Chair Constant asked for one of the major assumptions, which was how in the world can we propose the budget without knowing what our fund balance is? And that's one of the major assumptions that we'll talk about. Number two is what are our major changes from our 2024 approved budget? Number three, we've got a few very minor changes that we want to draw your attention to. Number four is the school district. Number five is alcohol tax with some handouts requested by Assemblymember Brawley. Number six is utilities and enterprise funds. And then finally, number seven, the tax limit calculation. So let's talk about, and here is an updated calendar because we've added a few dates that weren't at the most recent calendar that's been shared with a few of you. The new dates are Thursday, April 18th, and a special assembly meeting has been added to the calendar. And then on Tuesday, April 30th, another special assembly meeting has been added to the calendar. There may be some other changes that have not been added to this calendar. But let's talk about the major assumptions that have been loaded into this budget. Number one is we're all aware that our controller division has done an exemplary job under very troubling circumstances to issue some financial statements, and we still don't have them. But it could have the impact on our 2024 financial circumstances, but we're assuming that it will not. And in particular, we're making an assumption that the delays in issuing the 2022 financial statements will not impact SEMT revenues, State of Alaska revenue sharing, or the Municipality of Anchorage continued self-insurance status. That's the first one. Number two, we will not have any unbudgeted 2024 litigation or trials, as an example, eClutna. So if we have a big trial or litigation, that would be an unbudgeted item that we would have to appropriate for later.
Yeah, that's a very interesting element to include in this. And I love that you're speculating on litigation relating to eClutna. It sounds like you've been hearing some information, but the good news is we actually have budgeted funds for litigation for eClutna. And so
So to add some clarity, no unbudgeted. So in other words, nothing that we have not budgeted, right?
Okay.
No, maybe to add a little clarity, no unfavorable activities beyond what is in the budget, right?
Fine, judgments are outside of the cap, but
Okay.
we still have to pay up front. Okay.
Okay, so number three is something that perhaps we haven't talked about for a very long time, maybe 2 or 3 years, which is no negative issues regarding the Alaska Center for Treatment or Golden Lion, meaning no required refunds under the municipal charter and or the stipulation agreement with the settling parties. And we have some slides for that, so we don't need to understand that comment just yet. And note that the administration has a forthcoming proposal for a work session probably late next month regarding the Alaska Center for Treatment that we hope to raise for the Assembly to consider that would achieve compliance with the settlement with the settling parties. The next major assumption is no negative financial effects of closeout of municipal light and power other than workers' comp and general liability. And we'll have a slide for that. And no additional 2024 charges, meaning allocations from workers' comp and general liability. And we have a slide for that. So we'll talk about that in detail. And then here's Chair Constant's comment, which I agree wholeheartedly with. This is probably the most important assumption, which is fund balance is, and notice that we underline this word, exactly 10% plus 2%. It is exactly neither high nor low in compliance with fund balance policy. We have one new assembly member, so some background is that fund balance is due from the controller each year for the prior year on or before March 31st for the prior year. So what that means is that 12/31/2023 fund balance was due to OMB on or before March 31st, 2024. So even if 2022 fund balance had been available as of that date, we can't use 2022 fund balance for this exercise because not all 2023 months have been closed. And even the months that have been closed have been mostly closed because there are some large items that aren't closed during what I would call normal months, and they wait until meaning the controller vision waits until months 13 and 14 to deal with some large items. That would be TANs and many other things that aren't dealt with until what we call month 13 and month 14, when the really difficult and large items are dealt with. So back to Chair Constant's comment, which is, well, what would happen when we find out what 2023 really is, right? So there's, it's going to be one or the other. It's going to either be higher or lower. So if fund balance, if we end up being happy and fund balance ultimately exceeds the 12%, then something we haven't talked about for a long time, which is the spending cap versus the tax cap. The spending cap.
There we have it.
Pardon?
There we have it.
Okay.
I'll come back to this point. There we have it.
Right,
This
exactly,
is an
exactly.
intentional policy.
Well, so then if we'd be happy, if we were in bullet point number 2, everyone is happy and we have no problems, and additional appropriations of spending could be possible in the middle of the year, and everything's okay. But if we end up in bullet point number 3, then according to policy, according to code, we would be looking at expense reductions in order to balance the budget. So next slide. Okay. On April 10th, OMB received an updated fund balance calculation. Now remember, this is 2022, so this has limited value because this is not 2023, but it is information. So we received 2022 on April 10th, and here's what it shows. It rolls forward 2021 to 2022, and be careful not to focus too much on the bottom 2 rows. Focus on rows, mostly rows 3 and 4, because row 3 is the row that sort of tells you, are you in compliance or not? If that row was a 0, you'd be in perfect compliance, and it's not. But when you look over to the right, beyond those blue boxes at the top, you can see that we're getting closer to being in compliance because that negative number keeps on dropping and dropping and dropping. And we got closer by exactly $28,687,357. That was our improvement during 2022. But we're still not, as of the end of 2022, in compliance with our fund balance policy. So topic number 2 is, what are the major changes from 2024 approved? So everyone should have copies of the assembly documents from Tuesday night, and I would recommend that you pull out resolution 2024-104, because we will occasionally say, go to the exhibit that's attached to that resolution, and we might say, hey, we're going to be looking at row 16, or we might be looking at row 20. Because in my opinion, even as OMB director, that exhibit is really hard to understand, and we're going to help you see some of what those lines are, right? Okay, so let's take a look at some of the major changes. So one of them is something that some of you may not have heard about a lot for a while, and that is PERS from MLNP and Golden Lion from MLNP, and they work in two different directions. And this municipal light and power, the sale of municipal light and power issue is only a small fraction of the total municipal light and power issues that we have to deal with to wrap up the 2020 sale of municipal light and power to Chugach Electric Association. However, we need to deal with a few of them now because it affects the 2024 budget, but we have a lot that remains left to deal with later. The high level issue is this. Number one, some municipal light and power costs have been charged to the taxpayers over the last few years that should have been charged to municipal light and power. And if we all go to that exhibit that looks like this, and we go to row 47, that's where you'll see that number. And what we're trying to do is we're going to try to fix for what's been happening for the last few years. I'm going to put my glasses on because I'm old. So I have to put my glasses on to see stuff. And you will see a number, and the number that you're looking for is over on the very far right, and it says 3688021. Okay, but then there's an offset because we discovered something else. And that's why the header says PERS versus Golden Lion with MLNP on both of them, because we've got two things working in the opposite direction. So while we're working on wrapping up MLNP, we're also trying to wrap up one of the aspects of MLNP, which is that we have an obligation under municipal light and power sale, which is to spend $15 million on the Alaska Center for Treatment. And as we were working toward consummating that obligation by the deadline, we discovered that inadvertently, some operating costs in a capital project fund had been spent that shouldn't have. And we need to rectify that, and this budget attempts to rectify that.
That's a really broad statement. So exactly what capital funds were spent in a way that wasn't allowed? Because what I'm hearing is out of the 15 million that was set aside, we spent $756,532, which is the number there for Golden Lion, that we shouldn't have spent out of the Alaska Center for Treatment set aside based and for capital.
Correct. And so everyone who's trying to follow along, we should be on row 35. And Ms. Zalatel is correct. So the municipal light and power sale had different pots of money, and one pot of money was exactly $15 million. And it was for capital and capital only and not operating, because when you read the settlement agreement with the settling parties, the wording is very clear, and I think maybe it's not on this slide because that's a different section, but the wording with the settling parties does not allow us to spend any of that $15 million and get credit for it for operating expenses. It's only allowed to be spent for capital dollars.
Okay, so one request for follow-up will be to pull the MLNP agreement, settlement agreement, and send us the provision you're referencing.
It's actually on the slide, but I will.
Send us the agreement too, so we
Sure.
can read it in context, please.
Of course, absolutely. And the wording of the relevant wording is actually on a slide, but we'll send the entire agreement to you as well. Can you write that down? Okay, thank you. Okay, so in any case, the impacts of these two items work in opposite direction, and the two partially offset. So next topic. So we're going to get off on a little tangent right here and then come back to earth. So this is a charter provision that relates to the sale of MLNP. And basically what it says is when you sell a utility, you retire the debt of the utility, and also you retire other municipal debt. And this is kind of interesting, deemed appropriate by the assembly. So had the MLNP sale been a clean transaction, the PERS debt, now we're getting back to PERS. We're not talking about Golden Line now, we're back to PERS. The PERS debt to the state of Alaska would have been repaid in full at the time of the sale. So what do we mean, the PERS debt to the state of Alaska? And by the way, everyone, instead of looking where my circle is, everyone look to the right of the circle, and you see that big red word that says missing. So MLNP was an extremely complex transaction, and people worked very hard and did the best that they could to pull together all of the liabilities related to the MLNP transaction. But in my opinion, we accidentally, inadvertently missed one of the obligations that MLNP owed to the municipality, and that is that MLNP owed the municipality its share of the workers' comp and general liability debt. And we will come back to the assembly later on that topic. So why didn't MLNP pay off its PERS debt at the time of the sale? And I'm going to talk fast because I don't want to spend too much time on this topic. Historically, PERS used to be a multi-employer single agent plan where each participant, such as MLNP, stood alone on its own 2 feet. Unfortunately, many years ago, the state of Alaska started to commingle the employers' accounts, and it went on for long enough that we as a state had no reasonable choice but to merge all of the accounts into a single cost-sharing plan, and this happened in 2008. And the result was that MLNP had no choice, and MLNP had no longer had its own standalone calculated liability that it was able to pay off at the time of the sale. And for those of you who want to audit this comment, you can look at the PERS footnotes in any annual audited ACFR after the year 2008. Interestingly, you can actually look at the appropriation document to see if any, well, actually you won't see it in the resolution, but you can look at the flow of funds when PERS was liquidated and see that our first PERS payment to the state of Alaska for $1.89 million was paid for from MLNP cash on hand. And this is really important because that's essentially what we're asking you to do this year. And this is just a mere sampling of payables that were made using MLNP cash on hand. What's our current PERS status and why are we talking about it now? So here's what happens. We receive a bill every year from the state of Alaska, and these bills range from 1.2 million to 1.4 million a year. And we had elected years ago to treat these costs as taxpayer operating expenses, but they are in no way operating expenses. They have absolutely nothing to do with operations. And unfortunately, these state of Alaska bills will only stop at the earlier of when PERS at the state level becomes fully funded, or when the state of Alaska, when a state of Alaska legislative solution corrects this problem. And unfortunately, here's the rub. Bills will continue long after the mortal lives of the employees and their PERS dependents, and because the state's annual invoices have nothing to do with any human individuals that used to work at MLNP. If no legislative solution is obtained, 100 years of these payments equal about 135 million in cash, and that's figures undiscounted. The Assembly had received some information about this issue because I saw some PowerPoints that the Assembly received. In one PowerPoint, the Assembly was told that the payments would stop in 10 years. That was incorrect. In another PowerPoint, the Assembly was told the payments would stop in 25 years, and that was also incorrect. The MLP sale, the reason why a clean sale was impossible is that there were some complications. Number one, Chugach Electric could not afford to pay 100% of the sale at the time of transaction. But number two, as we said, PERS could not be fully repaid at the time of the transaction because of the actions of the state. So let's skip, we're getting into the weeds. So this slide shows that the state is making no progress toward PERS full funding. And this slide kind of shows the hits that we've been paying to the state over the last 5 years. So we have some budget opportunities, and it has three parts. The long-term solution is not for action now, but we will come to you later with a conversation and an ordinance. So let's just talk about the short-term solution. In the current year, we're proposing to reverse the 2024 budgeted expense out of HR and reverse the prior year's expenses that have been charged to general government as a taxpayer hit, and use ML&P cash on hand just as that first payment was handled. And let's skip the long-term proposal because it's complicated. And then let's move on to the next item, which is the TANS calculation. And folks, this is row 11 on your attachment. So you can see on row 11, it says TANS investment earnings, but in reality, it's two things. It's TANS investment earnings net of TANS investment expenses. So on April 1st, we learned that a TANS transaction won't happen this year. And there's a net impact to our budget. But you can see when you look at this slide that it affects quite a few different departments in quite a few different areas. So we had to rerun the budget.
So why? We have never had an answer on the record of why we're not issuing our tax anticipation notes this year.
I don't issue TANs, so I don't know.
So before we proceed, there's an assumption that we're not going to proceed with the tax anticipation notes. Folks will recognize that we did not pull that item off the agenda for our meeting, that it is introduced, and it is a conversation that we're going to need to have, because while we were told it's not significant, we're just not going to do it this year, we have cash on hand. What we're being told right now is there's a $4.2 million cut to the budget because of the failure to issue the tax anticipation notes because of the interest earned. And so, and we just also heard, and you'll give us details, that there's a substantial impact on several other areas of the budget, and you had to redo the budget because of this decision. I need to understand why.
So a correction is that the impact to the budget is much less than the number quoted. You would look to the lowest number on that chart on the very right hand. So the impact to the budget is $307,500.
So
Net.
I'm not going to take that without seeing the work, but you won't have to do that today. I expect that before we get to the issue on the meeting of the 23rd, we'll have full detail on the calculus and the methods and the reasoning. The most cynical among us have been told that it's because the mayor doesn't want to issue tax anticipation notes because when the bond rating comes in, we'll have a bond rating reduction, and that will politically make him look bad. And so I just want to make sure that we have the work, not just the assertions at the top level.
The work is right there.
And detail.
The
These are
detail
just-
is right there.
Okay.
Yeah,
We'll come back to this.
Okay. So next topic is we should go to row 16. And this is updates to State of Alaska revenue sharing. The 2024 approved budget had about $4 million of State of Alaska revenue sharing, which was equal to our 2023 State of Alaska revenue sharing. But then we received a letter from the State of Alaska, and you can see the number highlighted in yellow on the slide that's being displayed. And this was a big, big setback to our budget. And you can see the impact if you look at row 16 on your attachment. So then next,
Ms. Brawley.
so next is,
Ms. Brawley has a question.
Yeah, sorry, because I don't want to forget to come, if you can go back to the last slide.
Sure.
So I see that says January 31st. So my understanding is the governor's version of the budget did not fully capitalize the community assistance fund, but it's been since added to the, so I guess I'm just questioning the timing of this, because I understand we have to budget with the information we have, but my understanding is full capitalization of that fund, which would mean we get more like 4 million, whatever the total is that we would otherwise get, is being worked forward. So if this is for 25, that budget isn't finalized yet. So I guess I just wonder Do we have more assurance that we're going to get more of that money that because this was dated January 31st, or let's say we go with this now and then by June we know it was fully capitalized and we get a larger amount, then how would we account for that?
I just don't know. Yeah. So next is building safety fund. So this is Fund 163, and if it were an animal, it would be a platypus. I call it a hybrid fund because I used to think it was an internal service fund until about a month ago, and then I realized it's not really an internal service fund. An internal service fund is where fees are supposed to cover expenses. In reality, it's a service area fund. So you would have a map. And a service area fund is one where taxpayers don't tax everywhere. I think I've got a slide with a map. It carves out Eagle River and Chugiak. The fund economically fails as an internal service fund, and deficits have grown over time. And we have no reasonable ability to increase our fees enough to break even, and we have no reasonable ability to cut costs without decimating service levels. So we met with the Assembly, and with the help of Assembly Council, came up with an out-of-the-box solution that hasn't been implemented in 20 years. And that is to implement some mill taxation. So we're looking at half a mill this year. But it's important for us all to understand the impact of doing this, which is that we've got less dollars available for other government spending. And it meant that we had to shuffle around other items in the budget, which is why we're looking at half a mill this year, hopefully a little bit more next year. So this is an excerpt from one of our ACFRs, and the number to look at is just on the bottom. And what it shows is the size of the deficit of the fund and how the deficit has grown. Just to give you an idea of how significant this financial hole is, and how important it is to address this problem. And so we're hoping for Assembly support with the solution that we've come up with. And here's the map. The map is a little bit too stretched out, but I couldn't figure out how to get it to be nicely aligned. So we're proposing a mill rate of 0.5, which would, and everyone should be on row 9 of this attachment if you're looking at your attachment. This would bring in tax revenue of $1.7 million this year, and that would be in addition to our normal operating revenues of fees paid by customers. And it's important to note that this kind of only stops further growth of that deficit of the fund. Next year, a larger mill rate is needed to actually reduce the deficit.
Ms. Salto has a question.
So your slide's got a typo. It's 0.05 mils, not 0.5 mils,
Sorry.
because that's what's in page 3 of 3 of the
Oops,
mill
sorry.
levy
Apologies.
on,
Apologies.
282, 2024.
I'm sorry.
I got caught up on that too. That's why
Yeah.
I'm very aware of it.
Okay, I'm so sorry. Yeah.
No, that's
Yeah.
okay. And I want to say too, because we haven't done this in a really long time, this is under the cap. So ultimately this becomes a policy choice
Yeah.
of, do we want to expend this room under the cap to address building safety or not? And Member Brawley and I, so not the full Assembly, of course, has worked with OMB
Mhm,
on this.
mhm.
So we wanted to present it as an option to you all because we
Mhm.
keep hearing about the debts, but there's a set of choices to be made after we get through all of these slides. But it should be 0.05, which it is like $1.67 million.
Probably.
Yeah, and just to be super clear, we talked about, is there a way to, 1, stop the bleeding, and 2, fix the problem? And I think we discussed anyway, the small group that met, not that we're going to be able to fix this problem right now. We need to come back to that. But the question is, do we stop the bleeding in this small amount where we aren't adding to the deficit? But then again, as Member Zalta said, balanced against all of our other priorities. So just to be really clear, we're not recommending this above every other choice that we could make, but we really wanted to see because we know it's a problem. So it's something on the table.
Okay. And I apologize for that typo. And of course, I made the typo twice. So, Okay, number two. Now this one is one. Those of you who read the things that I write and submit to the assembly have probably noticed that I've mentioned this once or twice. One of the interesting things is that balance sheets are like ovarian or like pap smears. You don't want to ignore bad balance sheets for 20 consecutive years. So and workers' comp and building safety fund are an example of that. So workers' comp is very similar to building safety. We've had a long-term deficit that has grown every year for 20 years. And the way this one works is we have premiums, insurance premiums that are charged to departments and enterprise funds and utilities, but they don't fully cover the costs. So similarly, here's an excerpt from an old ACFR to show that the first deficit appeared in the year 2000. So actually 23 years of pap smears that we've ignored. And so what we're proposing is, and anyone who wants to find it on their slide would go to row 40. We're proposing only a 500,000 partial recovery, and that's kind of intentional. And going back to Chair Constant's initial comment when we first started, let's say we get super fortunate, and when 2023 month 14 is closed and things are wonderful, further appropriations to shore up that fund could be considered by the Assembly. And as I mentioned before, as municipal light and power is wound up, we would like to have the Assembly consider that ML&P needs to bear a share of this deficit that started in year 2000, because ML&P most certainly was undercharged from 2000 to the year 2020 when it was sold.
Ms. Salatiel,
This is $500,000 of a total what amount of debt? Like how much of the deficit are we taking away? And I can't quite track it between
Okay,
the
so
various ones.
let's go to the next slide,
Okay.
which shows, and it's kind of hard to see, as of 2021, the deficit was $9.4 million. So as of 2022, it's probably $10.4 million. As of 2023, it's probably $12 million.
Okay, but from 2020 to 2021, that deficit went up okay, so it's about a $3 million annual increase?
So it's probably, I didn't look at every single year to see if it goes up exactly the same
Okay.
every year, but it went from essentially zero to about maybe $12 million over a 23-year period of time.
Okay, and this $500,000 is under the cap. So again, this is one of the many items under the cap that is the room of policy choices we have to make.
Exactly.
Okay, thank you.
Okay. So next is some other changes. And so folks are going to want to grab their exhibit if they want to see where on the exhibit these items are. So one item is, we receive requests from departments, and a lot of the requests we don't bring forward to the Assembly, but one of them seemed quite legitimate. And that is that M&O, of course, here's another typo, requested some overtime increase. And well, I typed it both ways. So M&O, before saying no, we actually took a look at what their labor was looking like, because we've all seen, some of their challenges so far this year. And it is running their labor is running hot so far this year for 2024. So because this request seemed perfectly legitimate, and one of the criticisms coming from Chair Constant is that we under budget for overtime. We're trying to listen to the Assembly, and this was one of the requests from the departments that we actually are bringing forward to the Assembly for consideration. And you would find that on row 38. And on the next slide, we can actually see the labor if anyone wants to see the labor year to date. So also on bullet point 2, which is on 3 rows, it's on row 37, 33, and row 41, but it's important, it all adds up to 0. We're proposing that some of the IT amendment given to it by the Assembly as that $900,000 reversal be shared among departments that really need it, and in particular, the controller division. So BDO recommends, and I, as an ex-controller of the municipality of Anchorage, wholeheartedly agree with BDO that the assistant controller position needs to be broken into two so that one person can focus on issuing the ACFR and preparing financial statements, and another person can focus on accounting operations. And this proposed amendment, which doesn't increase costs in total, provides funding for those changes. And then bullet point number 3 is a proposal for the Assembly to consider, and this is on row 43, for non-reps excluding public safety, in lieu of the new step for 2024, something that's half the price, a $1,000 retention bonuses for any non-rep employed at the last day of the year. And then last, this is one very inexpensive that I'm hoping the Assembly will support, and that is that any employee who works in City Hall has to pay for a portion of his or her cost to park in the parking garage. And we would like the Assembly to consider whether the municipality can absorb that cost. For an employee, it's $480 a year, and for some employees, that's a lot of money. And we believe that this very small gesture could increase employee morale and retention and reduce some of the poaching that we've experienced by other departments where there's no cost to park. And
Ms. Salto has a
Yeah.
question.
So for the city hall parking, was that only as to the executive branch of government? Did you include the legislative branch of government in that calculation?
it's everyone.
It's everyone.
Yeah.
Okay, thank you. And then I was a little bit confused by the third bullet point. So this is to implement the new policy we delayed to 2025. It's not some older longevity bonus thing that's still playing itself out.
So it has nothing to do with longevity, and it is not, it doesn't have anything to do with steps or anything like that. This is something kind of simple, which is trying to help the non-reps who, like a non-rep whose anniversary date is New Year's Eve. The delay of the implementation of the step change to 2025 would have the impact to that person of almost, very, very, very long time. They would not receive their step change until 12/31 of 2025, almost 2 years from the Assembly's decision date. And we're trying to help that employee know that he or she is important to the city by doing this and give them something. We actually did a calculation to show a comparison of what the non-reps have been receiving over the last 10 years versus Anchorage CPI to show the loss of wages for them.
Okay, thanks. This is a request to Mr. Colhase between now and when we take all of this up, why wasn't a partial implementation of the executive pay package kind of put on the table previously when we brought it forward? I'm making a request. I don't want an answer to that question because when we asked for a C under the prior legislation, it was kind of all or nothing.
Oh, my apologies. This is not executives.
I'm sorry, not the non-rep,
Okay,
sorry.
okay.
I'm speaking globally, like we had the thing, right? And we had a number, and what we've been told is there isn't much money in the budget. And at the time we made the 2025 effective date decision, it was a all or nothing type calculation. We weren't given a partial implementation. And so I would like you all to go back and think about that and tell us why at that time we didn't get this opportunity, because we weren't given it. We weren't given a smaller amount to contemplate. We also didn't have any visibility into where there would be money for it.
Okay.
Thank you.
Okay, so next slide is, this is just,
Anna has a question, Ms. Brawley.
Yeah, thanks. Sorry, just because I know we're going to go through a lot, so I want to kind of cover these. On the overtime for M&O, I understand that point. I guess I wonder, how does that interact with the bonus pay changes that were made? This is separate from that.
this
isn't
is separate,
it? Okay, and this
yeah.
is really just paying for overtime.
right? This is just overtime.
Okay,
Yeah.
thanks. Well, I guess y'all repeat or
Go ahead.
Yeah, Member Zelta's question just now was, is it overtime that has already happened or that is basically projected out through the end of the year?
So this is M&O's projection of what they will need in order to meet their overtime for 12 months of 2024.
Yeah. So say we have, for example, another big snow season this fall, that would be covering.
Right.
Okay.
And so this slide kind of shows what OMB did to verify whether or not their request was legitimate or not, because this is their year-to-date. See that yellow number? They're already $600,000 over budget for labor, all labor. So it suggests that their request is very legitimate.
Thank you. And then I had another question, if you can go back to the last slide again. So on the payroll item, so I think what I'm hearing is you're saying splitting one position into two different positions. And then, and I guess, could you talk through the purchasing side? Because you mentioned the controller, and I'm looking just at the wording, because when I saw it's line 41, it just said increasing funding for staffing. So maybe you could just explain kind of what the other piece of that is.
So let me make sure I know which one 41 is. So I put my glasses back on.
Line 41, it's just the purchasing. It just says increased funding for staffing in
Right.
contrast to the one that with finance where it says the word controller.
Okay. So, when we think about historical changes to Title VII and where the threshold used to be and where it is now, when we think about what the threshold would be if it had followed inflation over time, it would be much higher than it is. And so Title VII, the current threshold has had some impacts on a lot of departments, and including that particular department. And they have felt a lot of workload impacts from the threshold, and they've requested one extra employee to respond to their workload.
Okay, thanks. So just to be clear, it's moving the money from IT, which makes sense, but it's really two different things. So the BDO recommendation was just related to the controller. Is that right?
Well, yes. So it's not just the BDO recommendation. So the BDO recommended that the assistant controller position be split in two, but there's more money than needed just for the BDO recommendation. So we would also use the surplus funds beyond the BDO recommendation to provide extra funds to also work in the grants department to shore up the grants department, because right now that's an area that needs a little bit of TLC as well.
Okay, I had a follow-up question on the purchasing. Why wasn't that included just in the 24 budget? The changes to Title VII predate the beginning of this year by quite a bit, right? And instead we saw a general policy of reducing positions in the 24 budget. So this feels a little bit late. And I guess the secondary question I have is there any ability to use any term contractors or other support for purchasing while we kind of wait and see what, the effect might be, right? Versus adding a whole position when we're already having recruitment issues.
Right. And I apologize, I don't know why it wasn't added in the 2024 budget because I'm pretty new. So I will circle back. I'll circulate that question to purchasing and ask if contractors can also supplement their needs.
Thank you. Please proceed.
Okay. So next slide, we've looked at this one. So now this slide is right now, let me go back to this, this overtime adjustment. You'll notice that there's only one other department that is currently over its year-to-date labor, and that's the CFO department. And so that kind of leads to this one, which is we're proposing that the most recent BDO contract amendment from the CFO to the Assembly. And essentially what we're doing is we're proposing that the BDO contract live in one home, and that is the Assembly where it typically belongs. But we're also increasing the Assembly's budget. So the Assembly doesn't have to eat this increase. And this follows best practice. We really should get back to nice, clean accounting where we don't scatter things around like a dandelion in the wind. And so what we're proposing is to increase the Assembly's budget so that the BDO contract can live in one home. And that would allow finance the CFO's budget to not already in the month of April have its labor be overspent. This is best practice.
Thank you. I'm sorry to go backwards. On the IT positions
Okay.
that we don't expect to fill, can we know what positions those are? I think that's really important. Just
Will you
because
write
we
this
don't
down?
expect to fill them doesn't mean we don't necessarily need them.
Okay.
Thank you.
We'll provide a list. Okay. So now let's talk about the school district. Director or Assembly member Zalatel is already aware of this issue, but I'm not sure that every Assembly member is aware of this issue. So we learned that the school district last year inadvertently charged over the tax cap. And because the municipality of Anchorage budget as a whole was very near the tax cap, it was only $57,890 under. This means that in last year's budget, the municipality of Anchorage taxpayers were overcharged. And unfortunately, that means we need to do a correction this year. And I'm sharing with you an exhibit from very, very, very deep in the school district's budget document. And this is from Appendix E in the school district's budget. And we've highlighted two numbers. One number is $589,545. So far, so good, right? And you have to go over to the other thing I've highlighted, which is were they over or under their tax cap? Because those little brackets can sometimes confuse you. So if you look over, you think, oh, yeah, that looks fine, until you see that because there were no brackets, that means they were over their tax cap. And we only discovered that this year. And so, and to add to the complication, their fiscal year and our fiscal year don't perfectly align. This year, we're fine. Brackets, in their case, are good because this year they're proposing a budget so far that's under the tax cap. So what I've done here is we're comparing the two side by side so you can see them next to each other. And you can kind of, and this Director Zalatel's like me, she's a paper person. If you follow the colors, you'll see how their numbers flow into next year's budgets. And so for those of you who want to study this later, follow the numbers into the next year with arrows. So we should have corrected this error last year. We didn't catch it until this year. And it's about a $1 million impact. And it's possible, you see that yellow number? At some point, we'd like to ask the school district to see if their math might need to be corrected on a go-forward basis, but this is not a time-sensitive issue right now, so we'll reach out to them later. We also would like to recommend some operational carry forwards so to make sure this doesn't happen in the future. And number one is that we'd like to ask that the school district attach their Exhibit E into the documents that they forward to the assembly every year so that you can independently see if they are over or under their cap. And number two is that we would like to ask the school district's resolutions that come to you to expressly state that they are under their tax cap, because that will help them, dot their I's and cross their T's. And then number three, OMB will reach out to the school district to that yellow number that I just showed you. I'd like to make sure that if they need to tweak their chart on a go-forward basis, that they take a look. And this would be the year for them to do it because this year they have a $3 million room to do it. So topic number 5 is alcohol tax.
For ASD, is there an actual adjustment in our,
Yes.
but where is it shown? All the way at the top?
It is item 7 on our agenda. So the adjustment is coming on our agenda.
No, but it's not in the spreadsheet.
That's not where it goes. It goes on the
Okay.
tax cap. You'll see it on
It's
item.
only in the tax cap. Okay.
Mhm, yeah.
And just so you know, I think this issue is a really good one for us to have at the joint school board meeting
Okay.
in June. So heads up.
I'm looking forward to that. Okay, so item 5 is the alcohol tax. We're proposing no changes to the 2024 approved. If there are any additional needs, we would flow those needs with supplemental appropriations. Director Brawley requested 2 documents, and we have them in hard copy format. You should all have them. One is 2023 December, and you should have that hard copy format. And then the second item requested by Assemblymember Brawley is year-to-date budget to actual for alcohol tax, and you should also have that hard copy format. And we have a Assembly work session next week, I think, which is our regular budget finance, and you'll receive them then too. So topic 6 is utilities and enterprise activities. And so now we're going to be looking at, okay.
Yeah, thanks. And I thanks for providing these reports. I'll look at them in more detail. And then I appreciate that you're saying that there's no kind of policy recommendations as far as alcohol tax. It sounds like it's just IGCs.
No budget changes recommended.
Okay.
Yeah.
So, and I guess this is going to be ultimately a question for the health department, but there was discussion about, for example, some rollover funds and other, there's other kind of things that we had started talking about, but I just want to see, were there any policy recommendations from the health department around that? And if you guys aren't aware, I'll follow up with them directly, but it was basically money that was for certain purposes that wasn't spent last year, and the idea was to bring it forward this year. Sounds like not. Okay, then I'll follow up with the health department. Thanks.
Okay, so number 7 is utilities and enterprise activities, and there are 2 components to this. One is operating and one is capital. So we're going to go to a different assembly document. We now want to pull out the document that says AR 2024-105, and that's what we'll be looking at now. So let's start with hydro. Favorite utility. And we're actually proposing, let's see, we're going to look at rows 21 through 25 for hydro. I must be on the wrong hydro. Oh, I'm sorry. I apologize, guys. Go to page 3. And I'm sorry. We want to be looking at AM 2284, 2024. And now we're back on track. We want to be looking at rows 21 through 25 to look at the budget changes for hydro. And what we're doing here is OMB has observed that hydro could use a full-time employee. I think the assembly also agrees, and the municipal manager as well. And but it appears that one person to run a utility and a fund would be a very strange utility and a strange department without any kind of admin support. And so what we're proposing is to have the person have an admin, right?
So we don't even have anyone running the utility. So
Right.
adding $135,000 admin seems interesting. And is that the all-in cost for a 12-month job, or is that prorated from first quarter moving forward?
So this, that's a good question. I would have to do the math and come back, but this of course would not be filled until if and only if a person was actually found and identified to run the utility.
So I guess I have a question for Mr. Colhase. I'm hearing 2 different strategies in this budget. One is we have positions we don't think we'll fill, but we're proposing to essentially eliminate from IT in order to move money around. But we have one here where we haven't been able to fill a position and we want to add a support staff to it. Like I'm hearing conflicting strategies.
So this would be a strategy to help incentivize someone to be willing to take on the job, because it would be very difficult to run a utility without any admin support at all. The budget.
Okay,
Yeah.
I mean, and where does the 135,000 come from?
So that is the fully loaded cost for an admin officer.
No, I mean, where do we find $135,000 to add this
Oh,
money into this
so-
utilities budget?
So hydro is more than self-supporting and very profitable. So it would be it would be easily funded from their self-generated net income every year. And they're, if you crack open their income statement every year, they build equity every year.
Okay, is this $135,000 because it's out of their equity position?
Right.
Something we could just add to the director position to make it a very lucrative position to get someone in there?
I'm just speaking off of my opinion. You'd want to be really careful not to pay this position more than the other utility general managers.
But nonetheless, it has that kind of fungibility that we can
You-
shift it around however we need it.
You could.
Okay,
could,
thank you.
Mhm. Okay. So, so next we're on the water utility, and these are the operating changes for the water utility. The water utility proposed some revenue changes. They proposed some changes to implement GASB 101 now, and they proposed some other changes. And let's go ahead and take a look at a change that we're proposing to their budget, which is that we're proposing a change to their dividend. And, we've talked about this before, but we've got some slides here. So let's talk about the dividend. The sewer utility, Anchorage Wastewater Utility, is still under an RCA dividend restriction because their equity level is under 33%. It is too early to request lifting the dividend restriction because their equity ratio as of 12/31/2022 is 28%. In 2018, the RCA lifted AWU's dividend restriction. In addition, Anchorage Municipal Code, which was adopted in 2017, allows for up to 75% of the utility's net income to be received by the municipality in the form of a dividend, but only if their equity ratio exceeds 30%. Hydro has a different code provision.
Ms. Salatone.
Thank you. So the dividend comes out of the equity position of the utility. Is that correct?
The dividend comes out of the utility's earnings.
Earnings. Okay. And so you're proposing to take $4 million out of AWU's earnings. If we left it with AWU, let's just say, is that fairly unrestricted in terms of usage for AWU's purposes?
Yes.
Okay. Thank you.
Okay. So next slide. This is a code provision. This is from Anchorage Municipal Code. And there are 3 things that we're highlighting to you. Number 1 is the first circled item, which is that dividends are not expenses. They are basically a sharing of earnings between the owner of the owner of the utility, and the utility itself. The second item that's circled is that the process is that the utility initially proposes a dividend, but the third circle indicates that the dividend is approved by the assembly, which means that it is the assembly's decision as to the size of the dividend. And then here's the hydro language, but we're not proposing a change in hydro's dividend. So in 2018, when the RCA lifted the water utilities dividend, under oath, Anchorage Water and Wastewater Utility executives talked about what the plan was for the utility to pay a dividend. And what they said to the RCA was that they would pay a dividend of 33% of net income. And the RCA kind of poked at it and asked them some questions. And upon questioning by the RCA, the executives indicated that the dividend is an assembly decision, which is consistent with municipal code. We wanted to share with you that currently there is a dividend disparity between the water utility and the other utilities and enterprise funds. So we have a slide here which shows you dividend as a percentage of earnings, dividend as a percentage of equity, and just to show you current equity ratios, we also have that as additional information. And the reason why we're showing you this is because to ensure that you have accurate information in case there's other information that comes to you.
Thank you. I think it's really important that we hear from Mr. Corsentino on this. I can invite him to the Enterprise and Utilities Oversight Committee meeting next week because we haven't heard from AWU about this. And typically we don't dip into their budgets and make big changes until we hear from those particular directors, because it is very important to us that these utilities remain very self-sufficient and do what they're meant to do, which is be their own entities. So just so you know, I'll make that invitation to him and give him a little bit of our agenda next week.
Okay. And so also, as you know, every year memos are received by the Assembly where dividends are proposed and justification is given for the levels of the dividend. In 2023, the memo said that less than the 33% would be paid due to, quote, the current COVID situation, the expenses associated with the 2018 earthquake and FEMA recovery timeline. The 2024 memo was also 1.5 million, less than 33%, due to employee vacancies, expenses associated with the 2018 earthquake, supply chain issues, and FEMA recovery timeline. And those were the only risks noted in the memo. On April 10th, OMB was informed, let me rephrase that. On April 10th, OMB learned that EPA on that day had issued regulations for 6 substances in water that will affect the water utility, but the timing is as follows. Monitoring is required by year 2027. Solutions are required by year 2029 if levels are found to exceed maximum contamination levels, and notification to the public is required by 2029 if levels are required to exceed maximum contaminant levels. And the EPA is providing $1 billion to help states implement this testing and treatment requirements. And it's important to remember, the water utility is a regulated utility. If its costs go up, its rates can go up accordingly, plus a rate of return in addition to that.
Ms. Brawley has a question.
Yeah, and I know we don't need to get deep into this because it's I guess a little tangential to the budget, but I'm just wondering, because I know at the state airport, for example, DEC and other companies have been doing testing around that. And so granted, that's the state, it's not the municipality. So I guess in conversation with this, is there any way that we get credit for the kind of PFAS testing that's already happening? Because it seems like it's not all of it, but a lot of it is on airport land. And the known incidents of PFAS has already been discovered there. I know it could also happen at, fire testing. So there's a lot of other places it can come from. But I just want to put that on the table so that it's not just the muni. Thanks.
So this slide is very important. And I'm hoping the Assembly will keep this in mind with future conversations, which is this is a slide to show actual budget to actual histories for the water utility, the sewer utility, and for AWW combined. And the conclusion of this slide shows that over a 4-year history, the 2 utilities combined have underestimated their combined net income by $44 million. And what that means is that when you receive forecasts from the utilities, they're always very, very conservative. For instance, the dividends proposed by the water utilities over the last 4 years were $1.9 million paid to the municipality. And the water utility proposed to pay 9% of its net income before dividend. But in reality, the net income before dividend greatly exceeded what it expected. So while the AWWU executives said that they would pay 33% of their net income before dividend, in reality, over the last 4 years, they paid 3%, not 33%, not the 75% allowed under code, 3%. And I'd like you to remember that. Okay, so here is a range of allowable options for the water utility dividend. The low option is what is in the approved budget today. The 33% is consistent with the RCA testimony under oath by the AWW executives, and the 75% is what is in code today, $12.8 million. And OMB does absolutely not recommend implementing what is allowed under code, because if we do, in order to balance the budget, it would, you would have had your documents on time if we had just simply implemented what's allowed under code, because it would have solved all of our problems, but only for 1 year, because the water utility would have immediately been under a dividend restriction. We need to follow what the AWW executive said to the RCA as their plan. Otherwise, they will become equity impaired, and we won't be able to receive future dividends. Now, remember, this is important. Not all Municipality of Anchorage taxpayers are AWU ratepayers, and these taxpayers in particular deserve a rate of return on the AWU asset, which is carried on the Municipality of Anchorage's books at $656 million. At a 5.6 million dividend, that is a rate of return of only 0.9%. So next topic is the airport. We're proposing a $100,000 dividend, which is row 31 on the AM. And it is a very tiny dividend. Merrill Field is essentially debt-free, and the dividend represents 0.1% of the airport's equity. And why is this dividend so small? The airport's ability to pay a dividend is restricted, and only revenues not generated by the airport or by mineral lease revenues are eligible for a dividend. So the dividend source that we were able to identify are the cumulative net revenues generated from the net OPEB asset from the state of Alaska that we sort of alluded to when we were talking about PERS earlier, when we talked about what the state of Alaska had done when it started commingling all of the PERS accounts, including ML&P's account. So now here's solid waste. Now we should all go to rows 34. I must have made a typo. Hold on, let me grab my document. Solid waste would be row 34 through 6 on page 2 of 3. And these are 3 different solid waste funds. The first is admin, where the admin employees work. The second is disposal, and the third is refuse. And so let's start with refuse. So refuse is on page 1, and we're proposing an increase of $1.9 million, but don't be alarmed, because we're proposing a decrease of exactly the same amount in disposal. And what we're doing essentially is we're sharing the existing cost of the debt between the 2 utilities, which should have originally happened. So if you turn the page, there you can see the decrease. So there's actually no increase in costs for solid waste as a whole. And so next, if we look at rows 5 and 6, this is a position that is to be paid for by a grant. And so let's look right here. So this is the wood lot. Solid waste requested 3 positions, not 1. One was to be grant funded, and we're proposing it here on page 2 of 3, lines 5 and 6. But they also requested 2 new admin positions, and we evaluated all of their requests. But we took a look at their year-to-date labor budget to actual when we were evaluating the requests for the 2 admin positions. There were only 17 spent this year versus 27% through the year. So they're already $350,000 underspent, which will pay for those 2 positions. So they can create the positions and use their year-to-date actual savings and still open the woodlot, which is where people take their yard waste, and open up the woodlot, which will be really good for the public. So now utility capital requests. Water utility, CIB, quarter one, which we would want to go to page 2 of 3, rows 17 through 33. What we're proposing here is to support changes in the AW Capital Projects Fund, Alyeska Subdivision Water Access, a $300,000 project increase supported through grant funding, Emergency Water Fill Station, $1.7 million project increase funded through grant funding, Huffman Road Fire Protection, $1.2 million project increase funded through grant funding, Terraces Subdivision Fire Protection Pipeline, $3.9 million project increase to be funded $3.7 million from grants and $200,000 from debt. And then Public Drinking Water Access Project, $6.6 million, $5.3 million from grants and $1.3 million in debt.
Ms. Alta.
So yeah, as I was reading through the kind of more narrative version of those, it seems like all those grants are still TBD, right? And these are things, because these are on the water side, that if those grants didn't come through, AWU could use its cash position to fund or no?
No, read row 15. So it says, once the funding source is guaranteed, an appropriation will be necessary.
But that's not what I'm saying.
Okay.
Yes, always appropriations.
Right.
But what I'm saying is the color of the money, right? Grant money being red and AWU's cash being blue. It doesn't matter which color of money. If the grants aren't secured, we don't have to use the red money because we didn't get it. Can we then use the blue money, the cash position of AWU?
Marilyn,
Because you're proposing a dividend out of their cash position. So my question is that money also subject to possibly some of these projects should the grants not be obtained?
I'm calling a lifeline now.
Okay.
I just don't know the answer. So Wynn might.
Well,
Like-
I mean, it's pretty straightforward, Kristen. I'll reiterate it or restate it. It's unrestricted net income, right? That's the cash on hand generally. That's money earned, separated because it's no longer, and that's what we can pay dividends out of is unrestricted net income. Means it's unrestricted. So then the question is, can you use unrestricted income to pay for projects? And I think the answer is yes. I mean, I can't imagine a universe in which unrestricted net income beyond expenses isn't usable.
I just don't quite understand the question. Yeah.
One more time.
Yeah.
Okay, you're saying that AWU has money, right? Has cash.
Yeah.
It has cash that can be used to pay a dividend, right?
No, cash is not a source of a dividend.
Okay, maybe I'm using the wrong word. What is the source of the dividend?
A dividend is a share of net income.
Okay, great. Its net income is positive, right?
Only positive.
Great. That positive net income can be used to pay a dividend.
Correct.
That positive net income can be used for capital expenditures?
Correct.
Okay, thank you.
Okay. So, next slide is sewer utility, CIB. So we are now on rows 35 through 51. The projects proposed are a $4.5 million project increase for power reserve sewer access to be funded through grant funding, and Holton Hills sewer access $2.5 million with the requested increase to be funded through grant funding, total of $7 million increase. And then also the FOG receiving station, which stands for fats, oils, and grease, $12 million, this one, unlike the others, to be funded through debt, which is a typical funding source. It's very unusual for projects to be so heavily grant funded. So now we're going to move on to solid waste, and we're turning the page. We're on page 3 of 3. So let's take a look at what solid waste is proposing. So let's start off with the leachate treatment facility. And this was the item that was added very late in the process last Friday. And this is a potentially wonderful addition to their capital list. $13 million project with the requested increase to be funded through grant funding. And then on row 14, cell 9 remediation. I think we're all aware that cell 9 has a problem. $11.2 million for an emergency repair. And the proposal is to add it. And here's what's interesting. When this first came to us, the proposal was to pay for it with debt. But we had some conversations with solid waste. They have so much cash on hand, kind of going back to your question, Assemblymember Zalatel, that OMB proposed and solid waste agreed, and we moved it over to cash on hand 100%. So we're proposing that cell 9 remediation be funded with solid waste's own cash on hand because they have tens of millions of dollars of cash on hand. There's no point for them, no reason for them to incur debt and incur interest expense when they have sufficient cash on hand to pay cash for this remediation. And then lastly, 15th Avenue, a very small $250,000 increase to an existing project. The existing project is budgeted at $150,000, but that's inadequate. So we're proposing a $250,000 increase to amend the total project budget to $400,000. And this is for 15th Avenue for some leachate seep issues near Merrill Field. Yeah. And then now on to the most fun topic of all, which is the tax cap and tax limit calculation. I think everyone has this in hard copy. Does everyone have this in hard copy as a handout? And so does everyone have this? Aaron, did we pass this one out? Okay, so you should have this in hard copy. This one is different than most years. Going back to Assemblymember Zalatel's question, which is where will we see the school district's correction? And you will see it about 2 inches from the bottom. You see that number 1121200. That's where it shows up, not on the schedule we've spent a lot of time looking at together. Because what we have to do is we have to make room for that item here. And that's what we've done. We decided rather than saying to the school district, hey, you need to cut your costs, you need to submit an amended budget, you need to suffer more pain than you're already suffering, we will make sure that our budget can handle this item. And that's what we've done. And I think that might be the last slide. Let's take a look. Oh, so summary, about $1 million into the tax cap. We're proposing substantial new infrastructure development, most of it debt-free because it's grant funded, EPA being the source of the grant funding. A lot of new, we have new budget gaps like the State of Alaska revenue sharing that we've helped solve. Building Safety Fund, we work collaboratively with the Assembly to come up with new revenue sources that haven't been used in 20 years. Looking at some things that have been ignored for 23 years, like workers' comp and general liability. We tried to come up with solutions that didn't involve touching alcohol tax because there's generally a preference not to touch alcohol tax. And we help solve the school district's issue without asking the school district to solve it themselves. And we're open for any additional questions that might exist. And folks, I think each of you has a sticky with my personal cell phone number. I'm going to keep my cell phone on 24/7. If anybody has any questions, I will do my best to answer them. And what I'll do, usually I'll probably have to do some follow-up research, but I will circulate the answers to all of you without outing your name so that everyone can have the same information, because I know that some of this stuff that we've talked about might be completely new to you and also quite complex. So.
Ms. Brawley.
Yeah, thanks. And yeah, I think there's a lot of information to sort through, and I really appreciate, I know that all of this is complex, and I appreciate your focus, not just on getting through this budget cycle, but again, dealing with some of those longer term issues. I guess my one question in the meantime right now is, so given all of what was discussed, all of these kind of longer term issues that we're trying to address, there's still this $1 million under the cap. So could you speak to the policy choice to not tax to the cap?
So, as we all know, the mayor is a fiscal conservative and he believes in fiscal conservatism.
I would say the mayor styles himself a fiscal conservative, but other choices demonstrate otherwise. Ms. Salatel.
Thank you. So I kind of want to just take this last slide you showed us. This is a great summary slide. So currently, even if we do the building safety fund and all the other changes as proposed, we're $1 million under the cap. Is that correct?
That's correct.
Okay. So then the other piece here was the substantial new infrastructure development is really funded two ways. One, cash on hand and grant dependent, and those grants are unknown.
No, there's a third way. The third way is also debt. So there's three ways, but this year is very unusual because the amount that is grant funded is highly unusual and much higher than typical.
Sure, but we don't have those grants in hand yet. So I think that's an important thing. So we're using a combination of cash, debt, and hope with grants, which I'm optimistic, especially with AWU. They've had a really great track record with their
Right.
grants. And then I have a few more questions on the revenue sharing, and I apologize. I've been out
Okay.
and
Let
in.
me see if I can find that slide.
Well,
So-
it's
okay.
more of a timing question.
Okay.
So is the $3 million deficit in the budget, well, I think it's 3.6, is it because revenue sharing didn't come in R23 as projected, or isn't expected to come in R24 as projected? Because, right, we have to reconcile the state fiscal year with our fiscal year, and we're still in the states figuring out its fiscal year 25. So I don't know if some of this is dependent on what the state budget will do for fiscal year 25.
The misalignment of our fiscal years is mind-boggling, especially and it affects the school district too. And so all I can say is that that we budget to receive a check once a year. That letter that we received is what we expect to receive from the state this calendar budget year.
Okay.
Yeah.
But so in the calendar year 2024, we expect to receive a check from the state. That check will be $3.6 million less than we were expecting.
Right, exactly.
And is that based on something we have put in the 24 budget on planning a revenue projection from community assistance? Or does this go back into 23's budget and things we relied on for community assistance?
No, so 2023 was budgeted at 4 million. We originally budgeted and 2024 approved was budgeted the same as 2023, 4 million. Then we got that letter and everybody started crying. Well, not really, but the letter was 10% of 2023.
Okay, I see where you're coming from. That's not what's reflected in the actual House budget right now that just passed the floor. So I think we'll have to go back and examine that a little
Okay.
bit more. And of course, it's all in real time, right?
Right,
They're
right.
they're still doing their thing. So it is
Okay.
dependent on what this legislative session produces for
Okay,
us,
Okay,
right?
So that could be an amendment to
Okay.
yeah.
Thanks. Any other questions? Mr. Johnson, if you have a question, just come off mute. Mr. Constant stepped out of the room. Oh, there he is. Ms. Bronga.
I just have a comment that it's like the dynamic duo there. I just can't believe this, reference this line with this page. And I just think you guys are doing an amazing job. And
Well-
I'm going to really study hard. Ona will help me if I need it.
Well, Assemblymember Bronga, yeah, I really thank you because you reminded me that I want to thank my team. I have a very small team, and if not for my entire team, but in particular Marilyn Bonsoff, none of this could have been possible, and I'm personally indebted to her.
Yes, thank you so much. We've really appreciated as budget co-chairs the collaborative nature as we've talked about the budget this year. Marilyn, I am sure you are missing doing this budget presentation. I can see the envy in your face. So a few things for members as we prepare for budget amendments next week. Mr. Farina sent out the template know kind of the ballpark we're working in, right? Which is that 1 million, and or possibly more depending on policy choices made. Ms. Brawley and I will be working on some of our work around some of the projections. And if we can get that done in advance of Friday, we will try to, especially if that changes, if we believe that changes kind of the room. But we just wanted to make sure we underscored the reality of how much money we're talking about. We're not talking about a lot of money, and I know there are a lot of competing priorities. And then we'll have the opportunity to hear from Mr. Corsentino about that 4 million dividend next week. It'll be the day before, so not a ton of time to bob and weave and make shifts, but we did buy ourselves that extra week as well, in that we won't take action until the 30th, but it is the intent to open the public hearing on the 23rd. So that's just kind of some of our procedural logistics. And don't forget, you do have Mr. Farina also as a resource. Budget amendments should go to him once they are prepared, and he will collate them and make them into a package for us for presentation. That way we don't violate the Open Meetings Act. Yep.
Yeah, and then I'll just briefly add, one question that I'm following up on that I want to understand better is what, if any, alcohol tax fund balance and kind of where we are with that? Because I understand the administration's not proposing additional changes to that. And I'm not saying that because I'm confident there is room, but I'm just saying that because I know in prior years, especially first quarter budget revisions, a lot of amendments did depend on that alcohol tax funding for various purposes. And that before we got sworn in last year, the meeting that we watched happen, a lot of those were alcohol tax. So just to say that I don't anticipate there's going to be that opportunity this year, but in addition to what we said with general government, that 1 million fund balance, it's possible. So once we get that information, I can make sure Matthew circulates that to everybody. So just so we're aware, because I'd like to see a number, and also because we've made appropriations in recent months. So just wanting to see where that landed. Thanks.
And a last request, if any of you have ever had a burning desire to jump deep into the budget, we could have a third member work with us on this. So we'll take a volunteer if there is anyone with that burning desire. I'm seeing a lot of skeptical looks in the room. So just FYI. Okay. New guy, Ken says, but he can't until the 23rd, but yeah.
I'll speak briefly to that, Mark. You're the first member since I've been on the body who's had an opportunity to be pre-briefed on the Q1 process, because your first vote is really going to be this. And it's such a nightmare to walk in and be asked to levy taxes and have no idea what you're doing. So
You bought him an extra week this year.
yeah, you're in a really great position compared to everyone else. If there's nothing else, then we'll adjourn and everyone have a good weekend.
What time is it?